Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, February 21st, 2025. S&P 500 currently sitting at 6081. I'm David Zarling. I'm here with almost baseball season, or is it baseball season, Ian McMillan?
Yeah, and it's college baseball season.
Yeah, college has started. High school just around the corner.
Yeah, this will be second weekend for college baseball series.
South Carolina looking good?
Yeah, I mean they're 5-0, so
Dang.
I guess can't complain with undefeated. I wouldn't say it's been super pretty, and this time of year you get pretty subpar competition, but yeah, 5-0 is 5-0.
It is, man. You got to pick up the slack for the basketball team.
You do? Terrible, just terrible.
Well, at least you have a baseball team.
That is true. Don't want to take
College
that for
baseball.
granted.
Yep. UW-Madison, no baseball team. Kind of sad. But their hoops team is good. Maybe you only get one or the other. You only get baseball or you only get basketball. I don't know. I don't know how it works. We have plenty to cover this week, market related. Where would you like to start?
Yeah, so interesting. I guess I feel like 50% of the time I start off with that. Although, to me, market's usually pretty interesting no matter what happens. Did hit all-time high on the S&P. I believe that was Wednesday.
Is that the second or third one this year?
Second. Yeah. Second closing, all-time high. And then yesterday, a lot of spookiness. Some bigger names, more popular names, down a lot. So, shot across the bow, maybe. I don't know. Markets have responded okay so far.
Yeah, it's an interesting environment because we're only a few points away from another all-time high.
Mm-hmm.
But yet we've got surveys showing like a bull-bear spread on the AAII.
Yeah, pretty
That's
bad.
pretty negative.
It is negative. I think it's fascinating, on the statistic you're referring to from Dietrich. I don't have it up in front of me, but I think it's something like less than 30% for 3 straight weeks, which you're like, okay. So when we've had that, that's not a rare reading. People are super bearish. That happens. It's happened 137 times in, since the survey's been started. I won't say market history, but since this survey's been started, 137 times. We've had at least 3 weeks with AA bulls under 30%. The average of those 137, or let me rephrase that. Of those 137 instances, on average, when those were recorded, I think you said we were like 18% off the highs, and here we are not even one, because it's not. This data wasn't taken yesterday, so we are at all-time highs. I guess probably the data was taken last week, but still, yeah. Just fear out there amongst investors that we've never seen in this type of market environment. The fear has happened before at these levels, but usually we're in the midst of a pretty big sell-off.
Right. Well, and it's just 3 short weeks ago where Morgan Stanley, was worried and we're telling stocks to get diversified and cut back on stocks. You had a Wall Street Journal headline recently that retail is panicking.
Yes.
And then it's a juxtaposition, though, because I know Callum Thomas, who shares great charts, he also, that fund manager cash is the lowest it's been in 15 years.
Wow.
So is this a case of kind of like political polling where people are saying one thing, yeah, I'm bearish, but I'm fully allocated?
Yeah.
I don't know.
Could be.
And we also have a situation in our hands where Bollinger Bands on something like the S&P are pretty
tight.
I know Louis Spector, one of the nicest guys in the universe. He's one of my favorites because more people should follow what he puts out there. And for whatever reason, that's not the case. And he's just a true gentleman and post good charts. But here we have this narrow compression, and we know that from compression comes expansion. And it'll be really telling to see directionally which way we go.
I agree.
And we have a situation, bar chart shared this information, that we have the largest short positioning since July of last year.
Great. Yeah, I don't like hearing that.
And then Andrew Thrasher's, he won a Dow Award on his paper about the volatility tsunami, about how dispersion in the VIX, a measurement of volatility, when that gets narrow, that you have the potential of a VIX spike ahead. It's not a predictor. It's just saying, hey, we've had a bunch of sunny days. The odds of a storm coming are a little bit increased. And so I think a thesis that exists, right? Because we've been in a consolidation basically since the election.
Yeah.
And the market, using the S&P 500, had moved 70% off of the October 22 lows. You've consolidated since November.
Russell's below. It's
right.
It's below where it was so that Tuesday close, right? The election happens, you get the gap overnight. But yeah, Russell below. Terrible.
I do think that election night price level is important.
I think
it's a behavioral mile marker.
For sure. It's better than using January 1st.
Right.
Definitely something you could put an anchored VWAP on.
And so you do have a situation where high levels of shorting volatility, at least relatively to the last year. You have a compression in the market. You have negative sentiment, but not necessarily negative positioning. It's going to be interesting to see. And we're heading into a seasonal part. Basically Valentine's Day is when you start to see the second half of February not very strong. And we've got 1 week left in February. But I also know recording an all-time high in February is a big deal, which we did. That's one of those things where...
Is that a big statistic?
So Wayne Whaley, inventor of the Whaley breadth thrust, he talked about when the S&P hits an all-time high in February, the majority of times that happens, out of the last 22 years, 19 times it's finished higher for the year, and they're all double digit.
Wow. That's fascinating.
The exceptions being 2015, 1987, and 1966. So we'll see.
I'd take it.
Yeah, I would take it.
Feels tailwindy.
It does. And here's the scenario. This is probably the most bearish in a while that we've started an episode. And time frame matters. Even if we have a move down to the election gap or a 200-day, it doesn't negate some of these possibilities. You can be tactically near term, a scenario, a thesis unfolding of a brief correction that doesn't negate the bigger picture for the year of positive returns. So I want to be careful what we're highlighting. That doesn't necessarily, even if we get continuing corrective behavior next week, that doesn't negate the possibilities for the rest of the year. If we get a close below a 200-day on the S&P, fine. That would be a step to take. And while uncomfortable, right? Because that's about 6% away. Then, if we're below 5,700.
Why does it feel so much further than 6%? I guess you never. Yeah.
Because, it's been a good ride. It's been a good ride since late 2023.
Yeah. Pretty steady. Not coming off any bottoms anymore. Like a July 23, you're at 11% off the 200-day. March 2024, you're 12% off 200-day. And we did have corrections after that. Short summer, fall 2023, a little bit harsher. Last, what was that? Like April, and then into the July highs, we were again 12%. So twice last year, we made it all the way to 12% off the 200-day moving average. Those are really strong rallies. Here we are, 6% off. Pretty low vol. Right, what we saw in 2017 so far, got a long way to go, but so far, similar to 2017. And yet, we've got these statistics that are showing just how bearish people are. They're saying they're bearish, right? To your point, maybe not positioned that way. and I kind of get that, like every, like these Monday morning gap downs or the Palantir move this week, this immediate reaction of, oh, this is it. Oh, this is it. Oh, told you it was stocks were too overvalued. Here we go. And I'm kind of willing to bet that we ended up making our way to another all-time high somehow, sooner rather than later.
Yeah, sometime this year.
Could we get it 2015, 2016, maybe? Sideways for a bit. We were talking about, it's been a good run for 18, 24 months. And while we don't manage money on the mindset of, well, it's made a lot of money, it's been a good run, maybe we should take some off the table. That's not how we manage money at Client First. For trend followers, there are people out there that do care about, worries over economic policy and, are those people taking money off the table?
I'm old enough to remember 2017. Tariffs were a topic the whole time.
Yes. And the market went down. Terrible year for the market.
Well, 2017 was great. Yeah.
I know. Yeah. And don't we have that same, just like every headline is some spook job. And then, you go on a couple more weeks, and when you believe it, broad markets have found another all-time high.
Well, and the beauty of studying supply and demand and using technical analysis is, okay, step one, if we can't hold these highs that we've created, there's not enough demand to do that. Well, the next logical level would be around 58.70, which is the 12/31/24 close and the election gap. Then the next level would be near 57.80, the low from the year. And then you have the 200-day moving average at 5,700, which is also lows from the November and October of 2024.
Yeah.
So it's not like the market doesn't have levels that it can show us where potentially you're going to see risk increase, that sellers have control.
I don't even want to find out.
Yeah, same.
But we do have to eventually.
Well, and let's not, if
got to have some price discovery at some point.
And we've only had, since November of 2023, 3 negative months in something like the S&P 500.
Wow.
So if February ends up closing lower than the January close, and you have quote unquote a negative month, okay, so the fifth one since November of 23, and I can only imagine if we test some of those levels. So if we have this type of sentiment, which I would not call euphoria or optimism, if we have negative yeah, no way, I don't see it. If we have negative sentiment out there and we do correct back into areas like 57.80 or the 200-day moving average, can you imagine the bearish noise in positioning? I mean, you'd clear out because you'd likely have a higher VIX at that point.
Oh,
You clear out the volatility shorts. You'd probably see some of that survey information turn into reality as far as positioning goes.
Yep.
You'd see a stacking of put buying, because all put buyers are future actual buyers when they have to cover. So you'd have all this shorting going on that would stack the firewood that could actually legitimately carry the market for, if that happens. That's a thesis. If we were to go down to the 200-day moving average, 6% away, I can only imagine the bearish narratives at the time.
Be so loud.
And the hedging, the bearish positioning that would be taking place, that all that is future fuel for buying when those have to cover if the market moves against them. If we go down to the 200-day and then move higher, the amount of bearish sentiment and positioning could actually propel us for the next 12 months.
Yes, it could.
So time will tell. And we've seen some, it's interesting because on one hand, you've seen staples outperform consumer discretionary recently. This is not a month development. It's the last few weeks. You saw staples, one of the best performing sectors this week. But at the same time, you have something like biotech and you've got international, specifically like China and some of the Latin American areas, Poland. So it's not completely risk off. And you still have, we're fans of looking at credit, and you look at like junk bonds versus intermediate bonds, still look pretty healthy, still look pretty good.
Or is that JNKIEF?
Yeah.
Yeah, looks fine.
Look at triple C spreads. They've ticked up. They're above a 50-day moving average, similar to where they were in December, early January. They've ticked up, but they haven't moved substantially higher. So maybe there's a little bit of a credit stress to look at, but you just recorded a new all-time high in several things, including like financials.
Yeah.
You brought up the NASDAQ. So we'll see. I mean, it's why we have price levels to work with. Our clients are familiar with the tools that we use. And if the time comes where we're breaking below those levels and in important moving averages, we'll be moving to protection mode. We're not there yet.
No,
because bull markets
to worry about anything from the last couple of days.
Right. Because bull markets, and this is the beauty, when they consolidate like this, it's about what happens directionally. The thesis would be a consolidation in a bull market should confirm directionally by breaking out of that range to the upside. And so we have plenty of time for that still to be the case, even though I know we're going on 4 months of sideways. It's okay. I mean, after a 70% move, it's perfectly okay for the market to move sideways for almost 5 months.
Agreed.
Not a problem.
Not as fun, but it is what it is.
Right. So what do you think about other areas like gold, crypto, commodities overall?
Bitcoin still, Bitcoin itself, not a terrible week. It is likely going to finish green on the week. Still consolidating, still in this range between 92 and 107. Big range. Gold, we've had a weaker dollar, I guess, most of the year. I was starting early January. Dollar kind of peaked. It is strong. I don't know. I mean, new relative, kind of sitting at relative highs. If you're using GLD, depending, it's kind of a sloppy relative chart over the last 3 years, really. Towards the upper end of that range, though.
I'll just go back to any bearish thesis at this point is near term, and the long term uptrends are still intact.
Very strong uptrend on an absolute basis for sure.
And you look at a GCC, continuous commodity index. If it can hold its May 2024 highs, that would be very productive for commodities overall. But when you look at GCC versus S&P, it remains in a downtrend.
Yeah, and coming into some, I guess I call it trend resistance, overhead trend resistance. But yeah, again, a great chart on an absolute basis. It is going up. You're making money off of it. Just not as much. Now it is, it is up to date, or year to date it is up for stocks, but we'll see. Not substantially. What do you think? You think dollar's going lower?
Well, it's back in the box, right? It's back, back below 107. If that holds and stays into that range, it'll be interesting to see how stocks perform. Because, September, it's interesting, the low in September of 24 through the high in January of 25. It is interesting how resilient stocks were during that period of time. And that if you were to fall back into this range for the dollar, what does that mean for stocks? One thesis would be that would be very beneficial. But again, these things go in and out of correlation, so you can't sit there and say that's for sure what's going to happen. Or do we hold here in the trade weighted dollar and actually move higher? Don't know. I wish I knew. I wish I could predict the future. I wish they gave me the information like that, but they don't.
Maybe we'll get to parity with the euro.
Oh my.
We were there before, back in, what was that? Right near the bottom, fair market bottom, October 2022.
Right. So it will be interesting what the coming months bring. Part of being an investor is sometimes you have to sit through consolidation, and you've gotten so used to the ride that was before.
Yes.
And that feels good. And now it's about being patient and letting the market deliver the information it needs to deliver.
Well, and it's right. And it's not like it's a clear sign that it says, okay, time to get off the ride, time to get into the right lane.
Nope.
And it can be kind of weird and funky trying to navigate those periods where we are, even if it's moving into just an uptrend and not the same, still in an uptrend, but not at the same rate of trend, if that makes sense.
Yep.
That can be weird.
For sure. Yeah, markets don't move in a straight line, and as good as strong uptrends feel, part of investing is having to sit through consolidations. And this is where we find out who the real buyers are, who the real sellers are when these consolidations happen. It's all it is an auction process. It's price discovery. It's trying to determine where the buyers are, where the sellers are. Will sellers take over control of this market? If that thesis is true, we'll see the price levels that were previously mentioned break to the downside. But at this point, that's not the case. So there's about 6% volatility that you can count on and still have the bull market intact.
Good way to put it.
It's just the way it is. And before we wrap things up, I do want to highlight the support of this podcast, the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended clients by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Anything else you'd like to cover or highlight at this time, Ian, before we close this episode down?
I think that's it for me.
Okay.
Is still on track. Cryptos, Bitcoin's held up well compared to a lot of other cryptos. So I don't know if that's a political thing or what, right? Lots of talk around coin reserves and sovereign wealth funds. And, I think I saw France is going to start a crypto fund, whatever that means.
Yeah, there's always going to be a narrative, isn't there?
There always will be.
You know what's the hardest thing I feel like to teach investors, even young ones, is that by the time something is news, there's no edge to it anymore.
Yeah, it's a good way to put it. So I don't like when people talk about my stocks when they're doing well.
Right. Exactly. Like it's already had its move. So we patiently wait. We wait for more information. There is a thesis on the table of continued sideways, some type of correction into the election level on something like the S&P 500 or even a 200-day moving average that's currently sitting at about 5,700, 5,720. Whether we're talking about the election level near 5,880, those would be important levels to look at. And if we do get that, really important auction process that's about to happen to see if the buyers are for real. But again, next week, we could be making brand new highs, confirming the uptrend once again.
Could be.
So I appreciate you being
that. I hope we're here next Friday talking about another all-time high.
Agreed. Nothing better than all-time highs. Grow those accounts. People tend to like that. Markets are for making money. And there's a time to protect. Maybe that time is soon. We don't know yet. We'll make sure we stay disciplined to that process. But Ian, thanks for being on here again. Hope you have a wonderful weekend with your family and everybody listening. Make sure you share it if you find it valuable and give us a high ranking. We really appreciate it.
Yes, you do the same. Have a great weekend, everyone.